So I often get asked whether to buy property in personal name or whether you should buy it under a limited company. So there are quite a few factors involved. It depends on what are your end goals and where you're going to be in a few years. What do you want to do with the property long term, or how many properties you intend to buy? Do you want to build a big business out of it, or you're just going to do it small time and you want a few, maybe 3 or 4 properties? A lot of people don't understand the Section 24 taxation rules either, and they seem to think that you cannot offset all of your mortgage interest because of Section 24. So what you need to understand is that you get a 20% tax credit for interest payments that you've made when you're buying a property. Instead of being able to just deduct the full interest amount, you get the tax credit. Now it's 20%. So if you're a lower rate taxpayer, it makes no difference in terms of taxation and being able to offset your interest. If you're a higher rate taxpayer, it effectively means you're only able to offset 50% of your taxable, of your interest amount. So for example, if you earned £50,000 from rental income and had no other income, Section 24 wouldn't affect you. However, if you have a job and you're earning, I don't know, £50,000 already, then your rental income will take you into the higher tax rate bracket of 40%. You'd be paying 40% on your rental income, and you'll only get a 20% tax credit for your interest payments, which means you're not offsetting all of your interest payments. I'm not sure if that everyone's going to understand that. It takes a little bit of understanding to get it around your kind of head. There's a brilliant online calculator, so I highly recommend you check this out. It's called Tax Scouts. It's a free rental income tax calculator. You can then enter in your details. So it's a buy-to-let property, for example. Put in your rental amount there, your annual salary, any other income, and it'll give you a breakdown of what your tax should be. So if you click on here to add expenses, then you can put in your mortgage amount here. So let's say it's £1,000 on the mortgage. This then gives you a breakdown. So you can also add in other monthly rental expenses. Let's say £100 there. Then it gives you a total. This would be your tax calculation based on your situation there. And if you click on the bottom, the button below here, tax calculation, it gives you a detailed breakdown of how your tax is calculated. This should help you understand whether to buy in a limited company or whether to buy in your personal name. What you've got to understand is when you're buying under a limited company, usually you're paying about 1% more in interest payments. That 1% more is effectively 20% more in interest. So if you were going to pay 4% as a personal name and 5% in under a buy-to-let, you're actually paying 20% more interest. So you've got to work out whether that extra payment in interest is worth the potential savings of buying under a buy-to-let company. And there are other rules and regulations about buy-to-lets in terms of being able to pull money out. You've got to remember that when you have a buy-to-let under a limited company, that you're paying 19% corporation tax. The money's then sitting in your company. You then want to take it out and spend it, you've got to pay income tax. So you're paying tax twice sometimes. Whereas if it's not in a limited company, you're just paying personal income tax.